Imagine a crypto that's not just another token. It's powering real cell towers in your neighborhood, burning its own supply every time someone makes a call or streams a video. That's Helium's HNT, and right now, it's adding 40,000 new users a week while the market sleeps on it. We're talking hotspots earning 900 HNT monthly by filling dead zones big carriers ignored, free plans ditching creepy location tracking, and international calls for pennies. But here's the real spark. Data transfer exploding exponentially, with charts screaming breakout from a falling wedge. At $2.60, is this the load zone before a 10x run to $23? Stick around, I'll break down the fundamentals, the adoption fire, and my weekly chart setup. If you're building yield plays, this could be your next edge. Let's dive in. Let's start with the core of what makes HNT tick. It's not hype, it's economics baked into the network. Picture this. Every time a device pings the Helium network for data, operators have to burn HNT to access it. More usage? More burns. It's like the token paying for its own growth, permanently removing supply from circulation. No wonder the project's thread calls it the currency of connectivity. Launched in 2019 with no pre-mine, HNT has a hard cap of 223 million tokens, having rewards every 2 years. As network activity ramps up, think IoT sensors, mobile users, even mapping cars, the burns outpace new mints. We're approaching a tipping point where destruction wins. That's not just theory. It's the quiet math driving scarcity while the world catches up. Speaking of real users jumping in, Helium Mobile just made their free tier even more appealing. No more mandatory 24/7 location sharing. You get 3 gigabytes data, 300 texts, and 100 minutes, all for $0, as long as you use some data monthly. It's a nod to folks tired of big tech surveillance game. For everyday folks dipping into crypto-powered mobile, it's a low-friction entry. No contracts, just coverage powered by community hotspots. This tweak alone could pull in privacy hawks and casual users, boosting that burn rate we just talked about. And if you're stateside dreaming of cheap chats abroad, Helium Mobile's new international calling lands like a steal. $10 per hour to over 200 countries, minutes rolling over for 30 days, no commitments. It's seamless, powered by the same decentralized towers filling those urban gaps. This is practical yield for holders, as every call funnels more traffic through the network, torching HNT in the process. Now layer on partnerships like Hivemapper. They just hit 36% of the world mapped, thanks to giants like Volkswagen, Lyft, and NBC. Their Bees dash cams, at $19 a month, snap street views while sipping Helium mobile data. It's wild. AI cameras, LTE connectivity, all on a Solana backbone. That's accelerating adoption, with daily data transfers hitting 62 terabytes last check, up 2 terabytes in a day. More maps mean more network strain, more burns. HNT holders indirectly ride this wave as coverage expands. And while everyone's chasing real-world adoption dreams, Helium is stacking 40,000 new ones weekly. Daily users? Nearly 2 million, spiking 40,000 in a day. Total mobile hotspots over 112,000, adding 819 daily. That's on-chain cardio your favorite Layer 1 wishes for. Oh, and one hotspot in a Huntington Park smoothie shop? Serves 900-plus users daily, earned 900-plus HNT last month. Big carriers skipped dead zones, locals fixed with mini towers. Zoom out to the numbers. Weekly Helium data transfers trending up 3% on average, but the latest week's 5% pop looks exponential. This chart forecast a surge toward 800 terabytes by year-end. It's not random. Features like free plans and global calls are lighting it up. More transfer equals more HNT scorched. If this holds, supply crunch intensifies, pressuring price higher. All right, let's geek out on the technicals, your favorite part, and mine too. I'm eyeing the weekly HNT, anchored fib retracement from December's $10.30 top to June's $2.15 bottom. Price at $2.60, smack in my green accumulation zone, $2 to $2.90. I'm dollar cost averaging here, splitting entries in thirds if it dips. Patience pays. Those orange dashed trend lines? They're squeezing tighter in a yearly falling wedge, a classic reversal pattern. Breakout north could launch us. But heads up, price is below all key EMAs, 10, 21, 55, 100 weekly. The 10 and 21 EMAs, blue lines, are the first boss. A close above flips momentum bullish. Down low, red line stop. Weekly close under $2 invalidates short-term longs. Out and reaccumulate at $1.50. But for my long-term bag, I'm holding through, believing in the project's decentralized future. Bottom panel. Heikin-Ashi RSI's second green candle, nearing neutral, oversold bounce brewing. Left side, VRVP's point of control at $2.60. Magnet City, volume clusters scream support. My targets? Green circles mark 5, 30% trim at $4, 20% at 6, 15% at 10 prior high, 10% at 15, and a moon sliver at $23, that 2021 echo. I'm trailing stops religiously. Hit $4, move to break even. Hit $6, secure the first win. I'm risk-free from there. Overall, wedge resolution plus burn mechanics could forward a 10x if adoption sustains. In my opinion, Helium is threading real utility into crypto's fabric, ownership in tomorrow's wireless world. It's not flashy, it's functional, with majors like T-Mobile leaning in. As burns accelerate and users stack, $2.60 feels like a steal for patient builders. If this sparked ideas, punch that like button, helps the algo push more yield breakdowns your way. Subscribe for daily charts and project dives. We're building a community of smart allocators. Join the free Telegram group, link in pinned comment. Catch my last video, and if decentralized networks hook you, check the Grass one. Wi-Fi sharing for earnings, links on screen now. What yield play should I dissect next? Drop it below, your call shapes the channel. Thanks for riding this with me. Never financial advice. Catch you tomorrow in the next one.